If you can't identify low risk, high reward, profitable trades, in this video, I'm going to teach you exactly how I draw support and resistance levels in under 5 minutes to help you become a profitable trader. In this video, I'm going to help you understand exactly what support and resistance is and how you can use it within your own trading in under 5 minutes. So let's get right into it. So support simply refers to a level on the stock where demand exceeds supply. This causes liquidity within the stock and buying orders to be built up near that area. Therefore, if you enter near a support level rather than entering randomly on the stock, you have the best chance to have the best risk to reward, along with having a higher probability to win the trade. In this example here on Apple, we can see a support level being made right here at 42.12. The reason this is a support level is we can see that the stock had an impulsive move to the upside. After that impulsive move, it kept retracing back to this level 1, 2, 3, almost 4 times. And therefore, we understand that if a stock has multiple touches at one support level or key level, this is an indication that the next time it comes to this level, we should hold and we should be buying the stock near that area due to the fact that there's more liquidity and simply buyers are going to overpower sellers in that specific scenario. Therefore, in this example right here, this would be a great level to enter the stock for a long position, as buyers will try to hold the stock above this level and keep the stock from falling lower. Vice versa, resistance is the opposite of support. Resistance occurs when there's more sellers than buyers, therefore there is more supply than demand. In this trade right here, we can see a resistance being formed at 44.29. This shows that sellers were more in control than buyers, and therefore every single time this stock came near this level, there was more selling liquidity than buying liquidity, and therefore the stock kept falling back to a level of support. Now that we understand what support and resistance is, how can we use it within our own trading? Well, there's 3 main things that support and resistance can help you with. Number 1, better entries. Number 2, higher risk to reward. And number 3, higher probability of the trade working in your favor. So let's go into an example where I can simplify support and resistance even further, help you understand how you can use it for your own trading. Okay, so here we are on SPY. On SPY, what do we see on this chart, right? We see that the resistance of this stock is above here at 429.56, and we have a level of support at 425.97. Now, as a trader, how will you use this to become profitable? Well, we simply want to enter in on the most highly profitable areas and areas of liquidity. Where would areas of liquidity be for this specific example? Well, for us, I'm not a range trader, as many of you guys know. So the way I would use support and resistance is simply waiting for a break and retest. This means that for this stock right here, what I would be looking for would be either it to break to the upside or to the downside, and then simply retest that previous support or resistance and make a bigger move up to either side. Now, when we're looking at this stock, we want to ensure that the retest is a strong retest for us to enter into, and this can be done on any single time frame. Therefore, if you're a swing trader or a day trader or even a long-term investor, the most profitable areas on a stock will always be near its support and resistance. The reason that I like to wait for a retest is because once the resistance breaks, it is actually still a key level, because once we come back into that area, that resistance will most likely turn into a level of support, as traders still have that level marked out on their chart. So let's see in this example exactly how we would trade this chart based off the price action. And right here, what do we see? We saw that the stock broke above that previous resistance, and now we're retesting that resistance that has now turned into support. And to confirm that move, we also made a very strong hammer candle. What this candle shows us is sellers try to bring the stock back below resistance. However, unfortunately, they could not do so, and buyers came back, which is this wick right here, and made the stock close above that previous resistance. Now, this is the most profitable area to enter this trade on, due to the fact that if we break below this resistance back into this specific support and resistance level, we come back into that range period. And therefore, our stop loss can be tight due to the fact that if this trade comes back down, we will simply exit out, and this is a very A+ setup of a high risk to reward trade. So for this specific example here, I'm going to target 433. This is a whole psychological number that that stocks like to bounce off of. And my stop loss for this trade will simply be below this pre-market low that we have developing right here. If we enter this trade would give us a 2.27 risk to reward trade. So let's enter in right here and see exactly what happens with this trade. As we can see here, this trade was on the 1 hour time frame and therefore we had to hold for an extra day. However, we made $3,970 on this specific trade, simply understanding what support and resistance levels are, how to use them, and how to effectively manage our risk. So I hope you learned something from this video. If you did, make sure to leave a like, comment down below if you have any questions, follow me on Instagram and Twitter, and I'll see you guys next week with a brand new video.